Get ready for the action, because we are diving straight into the latest automotive warfare. Mercedes has just unleashed a massive counterattack against its rivals, hitting back hard with an aggressive aerodynamic package that is set to redefine performance. We're talking serious engineering upgrades designed to dominate the track and set a new standard for speed and handling. This is the news you need to know right now. Is bringing you the unfiltered stories shaping our interconnected world. And finally, we circle back to the tech powerhouse. We look at the immediate aftermath of the Hesai Group's incredible Q1 performance and their crucial role in the Mercedes-Benz Level 3 autonomous driving rollout. We examine the surging shipments and the CEO's bold claims, and we ask the big question: is this the turning point for Lidar technology, or are the margin pressures a ticking time bomb? Stay tuned right here for the full breakdown. Mercedes has unleashed an aggressive aerodynamic package, signaling a direct response to recent upgrades implemented by Ferrari and McLaren in the racing sector. The latest developments suggest a significant push by Mercedes to gain a competitive edge, focusing heavily on optimizing downforce and aerodynamic efficiency. This strategic move comes amid intense competition, as rival teams continue to push the boundaries of performance. Industry analysts are closely monitoring the impact of Mercedes' new package, anticipating a potential shift in the competitive balance as the season progresses. The focus remains squarely on aerodynamic supremacy as teams strive for incremental gains in speed and track performance. Hesai Group is reshaping its investment narrative following a strong first-quarter profit return and a significant win with Mercedes-Benz. This development is prompting investors to reevaluate the company's position in the autonomous driving and robotics sectors. The recent confirmation of Hesai as a Lidar supplier for Mercedes-Benz Level 3 models, coupled with the launch of the Picasso 6D Lidar chip, serves as a major catalyst, bolstering the core strategy of expanding global design wins in advanced autonomy, while simultaneously testing the company's ability to maintain competitive pricing and quality in premium, safety-critical programs. The company's Q1 2026 return to profitability supports the near-term thesis, yet key risks remain. Concerns persist regarding potential margin compression if aggressive pricing strategies or high capital expenditures fail to be managed effectively amid fluctuating demand or rising costs. Hesai Group projects substantial future growth, forecasting CN Yen 8, 1 billion in revenue, and CN Yen 1, 4 billion in earnings by 2029, necessitating a 38.5% yearly revenue growth rate. This projection suggests a significant earnings increase from the current CN Yen 435, 9 million. This optimistic outlook contrasts with some lower analyst forecasts, which projected revenue closer to CN Yen 7, 3 billion and earnings near CN Yen 923, 5 million by 2029. The combination of the Q1 profit beat and the Mercedes-Benz contract is leading analysts to question whether previous, more conservative forecasts are still realistic, suggesting a potential upward revision of the company's valuation. Operating across mainland China, Europe, North America, and internationally, Hesai develops, manufactures, and sells three-dimensional light detection and ranging solutions, Lidar. The company is positioned with high growth potential supported by an adequate balance sheet. New York City has been the scene of a tragic incident involving a fatal fall into an uncovered sewer hole. Reports indicate that a woman fell directly from her Mercedes-Benz into the open sewer access. The incident has drawn attention to safety concerns regarding infrastructure and public access points in the city. This event underscores the ongoing need for rigorous maintenance and safety protocols in urban environments to prevent such preventable tragedies. News organizations worldwide, including the Times of India World Desk, continue to monitor and report on such incidents, emphasizing a commitment to accuracy and timely coverage of global events and the issues they raise. Hesai Group shares surged in U.S. pre-market trading on Tuesday following the company's announcement of a first-quarter profit and a significant supply deal with Mercedes-Benz. The Chinese Lidar technology firm saw its stock climb to $22.60, marking a 2.68% gain over Monday's close of $22.01 ahead of the main U.S. trading session. Hesai reported a substantial jump in first-quarter revenue, reaching RMB 6806 million, or $98.7 million, representing a 29.6% increase. Net income also improved, posting RMB 18.3 million, an increase from a loss of RMB 17.5 million in the previous year. A key driver of this performance was a 140.9% surge in Lidar shipments, totaling 471,723 units. The company shipped 353,441 units for advanced driver assistance systems, ADAS, and 118,282 units for robotics. Crucially, Hesai confirmed it will supply its Lidar technology for Mercedes-Benz Level 3 autonomous driving models. CEO Yifan David Lee stated the company is a strategic Lidar partner and confirmed supplier for Mercedes-Benz models utilizing Level 3 autonomy, which allows drivers to disengage from the wheel under certain conditions. This supply agreement covers Mercedes operations in Europe and China, with production originating from Hesai's Galileo plant in Thailand. CFO Andrew Fan highlighted strong, broad-based demand across both ADAS and robotics, noting the Lidar business generated operating profit of approximately RMB 42 million, leading Hesai to its fourth consecutive quarter of GAAP profitability. The company anticipates Q2 revenue between RMB 850 million and RMB 900 million, projecting 20% to 27% year-over-year growth. The Mercedes partnership clarifies the competitive landscape, as automakers typically engage multiple Lidar suppliers. Hesai's scale and cost structure were reportedly key factors in Mercedes' decision. However, investors face margin concerns, as the gross margin dropped to 39.1% from 41.7% a year prior, suggesting that increased volume is coming from lower-margin products. Geopolitical risks persist, with Hesai defending against the U.S. Defense Department's listing of the company on its Section 1260H list of Chinese military companies, asserting that no military products have been sold.